So let's bring on Bob Chapman. Thank you so much, Bob, for joining us in the Power Hour today.
Well, you're welcome, and it's very nice to be back again.
Well, thank you very much. And I'll tell you, people told me, they said, there are people literally that's all they want is Bob Chapman, Bob Chapman, Bob Chapman. And why is it? Why do you think people hang on your every word?
Well, I don't know. I think probably I just don't have any axes to grind. I'm kind of a rip and read sort of person. When I write, I don't go through all of these comparisons and foolishness and adjectives and adverbs, and I just call it the way I see it, and 98% of the time I'm right. And why that is, I really don't know. I'm just very happy that it has been that way, and I certainly hope it continues that way.
Well, we call the news here at the Power Hour also, and we call it, usually we're right on target. Lots of people say, they listen to the program because they like the analysis of the news. It always seems to be accurate. Well, you seem to be accurate also, but it's because we look at it and we look through it, and we have a lot of other things to compare it to. And you seem to have had most of the answers in the financial arena in the past 10 years. But let me ask you this. Out of everything that you see happening in the world today, I mean everything, what is your biggest concern, or you think the biggest red flag?
Even though we have been exposed to all of the monkey shines, I'll call them, by members of the Fed on one side and the other of the issue of continuing QE3 into QE3, I think it's very important to realize that they cannot stop something like QE3 and can't raise interest rates officially. Because if they do, the whole thing's going to come unglued. And, this past week, Europe says, well, we're raising interest rates. They're going to be very sorry they've done that if they want to keep their system going. And you may even think of that. And so we're going to have more of the same. And what does that mean? It means 18% inflation from QE1 and Stimulus 1 by the end of the year. By the end of next year from QE2 and Stimulus 2, perhaps 25 or 30% inflation. If they do QE3, which I truly believe they will, we could be looking at 50% in 2013. And 50% inflation brings you to hyperinflation. That's usually the bottom line, and it goes up from there to thousands of percentage of inflation in some previous economies. And
well, we've got a really bad connection with you. We're going to have to reconnect because it's very hard to hear what you're saying. But the QE3 that you're mentioning is basically, it's just spilling of more money. It's not printing of more money. It's just, the dilution of the economy more with more phony money. Is that correct?
Right. And what they are doing is creating money and credit, mostly presently, to purchase U.S. Treasury bills, notes, and bonds, as well as what they call agency securities, which are bonds of Fannie, Freddie Mac, FHA, as well as toxic waste, which are mortgage bonds, which are being held by banks and other institutions, relieving them of having them on their books and putting on the books of the Fed, which in turn they say they resell them at some time in the future.
And it looks as though they have no choice at this point but continue doing what they did in the past. Am I correct?
That's right. Either that or the whole system goes down.
So do you think that's what they're going to do? Are they going to extend the debt limit again and keep playing this game? I mean, like the phony shut down the government story, which we all knew wasn't going to happen because it was just used to get out their 3 points. It'll stop abortions. It will delay cancer screenings. It will the military won't get paid, which were their 3 talking points for this whole thing. This just doesn't make any sense. But they're continuing this charade. When you think of it in the terms of a charade, then it does make sense. They're continuing the charade, and they have to raise the debt ceiling, don't they?
Absolutely. Now, there's nothing else they can do. And essentially, they've done that by making some kinds of deals of which we don't know the details yet. And into the future, they're talking about changing things, but there's no details. It's just like Gaddafi agrees to a ceasefire, but there's no details. It's just a game that they extend and elongate what they're doing.
Well, I mean, this whole thing in Libya is just a caricature, if you ask me. The man who's playing the role there and playing some kind of game with the people in your mind, and who knows what the war is really like. We don't know. We know it's probably basically to get him out of there, take over the country. They'll pay off him, and he'll go, live in some island somewhere, and everything will, be owned by the United States. I mean, this is just the imperialistic United States taking over.
In part, Britain and France have a big interest there, as well as China. And so Gaddafi said in the past that he wanted to nationalize the oil industry and give each person in Libya a share in the company that would own the oil assets. And, of course, the royal families of England and Holland don't want that because they get oil from there, and they also have contracts there. And the fact that Gaddafi refused to participate in AFRICOM really sent the Europeans as well as the U.S. over the edge. And I think that's the main reasons why they went after him. And, of course, you have 4 aquifers under the country. They're pumping really good quality oil. They have an independent national bank, which is not controlled by the Rothschilds out of Europe. And they're sitting at 143.8 tons of gold. And so there's plenty of reasons to change things there.
Okay, speaking of gold and silver, it's kind of making some amazing advances, though on television you would think that it wasn't doing anything. I mean, they'll talk about, wow, the stock market closed 5 points up today or 10 points up today, and gold also is on the rise. It's why don't they tell people that if they had invested their money in gold a few years ago, they could have doubled their money by now?
Well, it's a lot more than that. And they look at gold and silver, but particularly gold is the antithesis of fiat currency. And they have to keep the price of gold and silver down so people won't think there's something wrong. People who listen to this program know about gold and silver and why it's so important. The rest of the world doesn't. So if they don't mention it, or they say it's a bubble or a craze, people won't pay any attention to it. And that even goes for the professionals who are in the stock market business. There was a speech in Singapore last week by Mark Faber, and there were 200 money managers there, and he said to them, how many of you have 5% or more invested in gold and silver-related assets? And none of them raised their hands.
Huh. And does that mean none of them...
Do you realize how much they've gone up over the last 11 years?
Well, does that mean that none of them really were invested in gold and silver, or none of them admitted to being invested in it?
Oh, I don't think they were.
Really?
And no, they weren't. And the reason why is it's politically unpopular. And if you're seen to be an investor in that area, you looked at by people who run your government, whether it's in Singapore or China or Malaysia, and I would guess the people who were there were from those regions. They don't want them to do that. And they've been given strict orders not to. It's just like the 2 exchange-traded funds, GDP and SLV, they were created by the government to keep people especially professionals, from buying gold and silver bullion. That's what they're all about.
We're going to continue talking about this. We'll tell you where gold and silver is after this 4-minute break with our guest today, Bob Chapman, the editor of the International Forecaster newsletter. We'll give you his contact information. Stay tuned. 4-minute break.